I hope everyone can hear my voice. Sir Venkatesan sir, shall we start the session, sir? Just a minute, sir. I think you are in mute. Let me check it. Just a minute. Yeah, you are in mute. Kindly unmute it, sir. I think you have been muted.
Good. Okay. Am I audible, sir? Am I audible? Hello.
Okay, sir.
Hello.
Yes, sir. I'm just
என்னோட வாய்ஸ் கேக்குதுங்களா?
yes, sir. கேக்குது sir.
சொல்லுங்க.
So, first job பத்தி ஒரு introduction கொடுத்துட்டு next உங்களை பத்தி ஒரு introduction கொடுத்துட்டு we will start with your main presentation, sir.
Yes, sir. Please go ahead. Thank you, sir. Thank you. Thank you.
So, good afternoon to all the participants. I welcome everyone for this wonderful session. I welcome once again all on behalf of First Job Human Capital to empower, inspire, and mentor young people by giving them the skills they need to support the growth of our national youth. First Job Human Capital establish a comprehensive plan for preparing a strong and skilled youth communities to provide employment opportunity for our national youth, to plan, lead, and coordinate the Pan India Job Fair, to schedule interview sessions and choose candidates as needed. We are developing and focusing on several goals for successful recruitment path. The world of work and business is always evolving, and thanks to our breadth and depth of expertise gained on the international stage, we are able to deliver fully integrated labor force that will support your organization requirement. Our biological system of brands and agreements enable us to provide comprehensive faced by our clients. It support our partners and up and comers throughout their careers. We are embracing computerized capabilities, enhancing current agreements, expanding our market, and generally improving efficiency. We see digitalization as an opportunity to grow business. We aim to become a more significant support partner by thoughtfully combining the finance of HR arrangement industry with best of innovation company. In today's rapid evolving job market, collaboration between industry and resource is a crucial preparing organization for future challenges. First Job Human Capital presents an initiative titled Bridging Industry and Resource for Cooperation BIRC that seeks to create synergies between business, industries, professionals, and resources. The goal is to foster mutual growth by enabling industries to adapt to changing needs and optimize resource effectively. About our speaker, with over 35 years of distinguished services in the Central Revenue Department, Mr. Venkateshwaran is a seasoned expert in indirect taxation, having held key position across various regions of India. He retired as an assistant commissioner, serving as a Group A officer in the Indian Revenue Service IRS. Mr. Venkateshwaran possesses in depth knowledge and practical expertise in excise, customs, service tax, and GST laws. His contribution to the training and development of tax officials have been immense, having conducted numerous sessions on GST law and its software implementation for both and state government officers. So once again, I thank Mr. Venkateshwaran sir to give us such a wonderful opportunities to enhance ourselves and grow with your ideas. Thank you, sir. So I request my CEO, Mr. Murli Kashinath sir, to give a few introduction about our organization, and for following that we can continue our speakers session. Thank you. Murli sir, is it audible? Murli Kashinath sir.
So thank you, Madan. Thank you for your brief introduction. I am welcoming you all on behalf of First Job. I am welcoming all the participants. In First Job, we have created the Bridging Industries and Resource for Cooperation, a unit which will be it will be act as a bridge between the resource and industries. This is our fourth workshop. Previously, we had an HR analytics, which was been done by Balaji Madurai, who was an HR head in HP International. And next, we had another branding workshop. And now we are having an GST workshop. This workshop was been planned by the suggestion given by the participant like you. Even you can also give your suggestion what would be the next topic for our next workshop. Continuously per month 2 workshop we are organizing, and there are participants across India who has been participating in this workshop. I take this opportunity to thank sir, our Venkateswaran sir, for coming as a resource person. Actually, I was speaking to the state GST officer to give one of his officer to clarify the GST related returns doubt and all those things. And the state officer have given our Venkateswaran sir contact to conduct this program. I am really happy, sir, and I am welcoming you to this workshop, which is going to be, it's a mixture of all finance, accounting, and compiling of all the people who are here. Please, participant, use this opportunity. You can ask any question. Sir is having lot of experience in the field, and he is having very practical knowledge on this taxation. Thank you, participants. Please be active, and whatever question you want to ask, you can ask related to GST and any compliance related thing. And please ensure that you are filling your feedback form so that you will be getting your certificate also for this. Adding to that, please suggest the next topic also. So we will bring good speakers to deliver their notes. Thank you, Madan. Thank you, Venkateswaran sir. Thank you all.
Thank you, sir. Thank you, sir. So I'm just handing over the session to today's speaker and the hero of the today's event. So Mr. Venkateswaran sir to take the session further.
Thank you very much, Mr. Madan sir, and all other office bearers of the first. Sorry, I forgotten your these things are human capital. So, and also I am really welcome the participants very eagerly waiting for the today's session. I do not want to take much on the talking the introductory these things. So let me go to today's sessions immediately. Not I'm taking. So all you people are, I was told, entrepreneurs, and also started the new ventures, everything. So do you want to know something about the GST? And they told they will be having a quite number of sessions on account of GST related issues. And today's session, they told we will be giving one of the session for GST is the input tax credit. So that is a very much required for the trade and industry, because the availment of ITC credit saves you a lot of working capital fund, which is required for the your dispatch of a goods, delivery of the goods or services. So input credit plays a vital role in the GST. Apart from your tax payments and everything, you are very much eligible, and legally you are permitted to avail ITC credit, whatever the tax you have paid in the earlier scenarios. So with this small introduction, let me go to these things. First, I will share my screen. You just check up whether I'm audible, whether the screens are visible also. So I'm going to take entire window. So, okay, sharing. Sorry. You just check up whether properly you are getting. Hello?
No, sir, I'm just getting the blank screen only.
1 second, 1 second. I will be properly share it. The sharing may not be proper. That is the only thing I can. Now you are able to see, sir?
Yes, sir.
Okay. Now are you able to see screens?
Yes, sir. We can able to see the screen, but it's not in the presentation mode. It's in the grid view.
1 minute, sir. I will again modify. It is not a grid view.
Yeah, now it's okay. Could you please press F5? Then it will be
Now you check up. Hello?
No, sir. Still, we can't able to see the presentation mode.
Given presentation mode only. And again, even still it is not coming, sir.
Yes, sir. So shall I share my screen?
Still it is not coming. Normally it has to come,
Yeah.
Zoom, I think some issues might be sharing. Whether I have to give entire screen or these things, sir, that you just tell me.
No, the presentation mode is needed.
Presentation mode is these things.
So can you go with a slideshow?
1 minute, sir. I will again. Share screen I have given, sir. Entire screen I am giving. But it is also window is also not properly coming. Normally it will be. Now it is okay, sir.
Yes, sir.
Hello. Now it is okay.
Yeah. Yes,
Okay.
sir.
Sorry, there are some technical issues which I couldn't also immediately attend. Now it is okay. So thank you very much for joining this session. Sorry for the interruption, the beginning interruptions. So thanks for the first job, human capital, which is bridging the industry and resource for the cooperation. And also I told very many entrepreneurs are there handling GST and other. They are also periodically given training on account of various issues relating to the trade and industry. So today's session is about your free workshop on account of your input tax credit with reference to GST. So you are all aware of what is GST is happening. You know very well 2017, the Indian indirect taxation has seen a very massive change. Earlier we are having a multiple tax system called indirect taxation system. We are having a central taxes levied by central tax authority CBAC, and we are having the VAT authorities who are also handling the indirect taxation for the sales, and we are having a purchase tax, and we are having the local levies, we are having an entertainment tax, we are having a works contract tax. So there are multiple indirect taxes are happening in India. So 2007 is the first time we told we have unified all these things. So what happened is we have started working on the unified goods and services tax with 2017, which is subsumed all other indirect taxation except customs and other taxes. So now we are having a only unified indirect taxation, which is nothing but your GST, in which GST is levied by the tax and central and state government. And we are having a uniform taxation law for the act, and as well as the procedural aspects, and the rate of tax were also same, and it is equally divided between the state and the center. So this is all about the your GST scenario. And here the major issue with these things we should understand is what is the input tax, what is the tax liability. Then before going to the session, we have wanted to give a disclaimer. Here I am not explaining each and every details, minute details about the legal provisions, but we are going to highlight which are the legal provisions required for a day-to-day requirement for the availment of our ITC credit, which is you are going to get on account of all purchases. So next, so in today's session, we are going to have these topics. One is the sections which is relevant to input tax credit, and rules, which is nothing but the procedural requirement for the availment of our ITC. Then some of the important definition you should know about input tax credit, and I slightly elaborate what are the important sections and important rules. And also you'll be happy to know there will be some refund is possible when you are unable to use your ITC. Then how you have to report your ITC availed in your books of account as well as 3B. And latest we are going the invoice management system, which is very much useful for the your MSME sector. So MSME sector, we are handling per month 500 invoices. If you are handling 500 invoices, it is better you use the invoice management system, which will definitely help you a lot, and also make you avoid unnecessary so-called notices or disputes which is coming from the department. So my request is for the MSME to please embrace the invoice management system completely, so that some of the issues will be tackled efficiently at the time of availment of your ITC credit. So the concept of GST and input tax credit. So in simple terms, GST is defined as a tax on goods and services leviable at each point of supply of goods and service, which means it is a multi-point taxation. Earlier we know very well about the sales tax. For each and every sales, you are liable to pay sales tax. But in the case of central excise, it is only manufacturing. After that, there was no tax liability. When we levy the taxes on each and every, that is a multiple point taxation, the government also has given input claim for the paid while purchasing the goods or procuring the services which are used for the in furtherance of business. So wherever you have paid any tax for the furtherance of business, then you are entitled for the ITC credit. So this ITC credit can be used for your set of your tax liabilities. So here it is a tax finally will be on the value addition, not on the total value. So this is the important aspect about the GST concept everybody need to know. So in this concept, if you understand, this is the point we can understand. Manufacturer, there will be tax. Then wholesale distributor, there will be GST. Then wholesale sale dealer, he is also liable to pay tax. And retail dealer also has to pay tax on account of the. Then finally, the tax will be passed on to the consumer. The consumer is the finally ultimate burden on the taxation goes to the consumer only. So other persons, or even though they are levying, they are passing it on the taxes to the next level. So ultimately the tax is going to be paid by the consumer. This is the taxation chain. So here we are having one more chain called the input chain, wherein input manufacturer or source, he will pay the tax. That credit will be given as ITC to the manufacturer. Okay. Then manufacturer in turn will, after producing the goods, will sell the goods or to the distributor. He will be having his logistic management to reach the consumer. So he will be sell the goods through distributor. So he is called a wholesale distributor. Then he can avail the ITC credit on which the manufacturer paid the any taxes. Until otherwise, it is prohibited. Similarly, the wholesale distributor will pass on the tax to the wholesale dealer. In wholesale dealer also, he is also eligible to take ITC, that is input tax credit, on account of the taxes paid from the wholesale distributor. And wholesale distributor will pass on the tax liability to retail dealer after value addition. And the retail dealer is also eligible to take ITC on account of the taxes collected by the wholesale distributor. And finally, the tax burden goes to the consumer. So he bears all the tax liabilities which is on account of the consumption. So this is a consumption based. It is the person who is consuming the tax, consuming the benefits, will be paying the indirect taxation. This is the indirect taxation concept. So you are having an input tax chain. So here, starting from the input manufacturer or source, finally till the retailer can avail all the ITC paid on account of the goods and services or capital goods which are required for the selling of the goods or in furtherance of his business. So this is the basic concept. So here we are having a 3 rules. We have to understand what is the legal provisions. There are having the conditions to avail ITC, that is 1, section 16, and we are having some restrictions. These are the goods on which, or these are the services you are not entitled for any tax, input tax credit, that is called your section 17. And we are having the procedural requirements which are listed in the GST rules 2017. Sorry, there is a typo error. So it is a 2017. Then legal provisions governing input tax. So let us know what are the legal provisions. So definitely we are not having a huge legal provisions. We are having, as I told, very minimum 3 sections are governed, and we are having about 10 rules. If you know these 3 sections and 10 rules, definitely you will not trapped by any of the input issues which may be unnecessarily hanging on your head. So there you have to understand 3 legal provisions which are sections, and some legal provisions governing the procedures will be explained in this session. The session may be slightly faster because we are having so many issues in a single day we have to cover. So that's why at times I'll be skipping some of the slides, or it will be slightly faster. But nevertheless, I have given this PowerPoint presentation already to your first job human capital to share with you. So it will be work as a handbook for you to understand the legal provisions and the procedural requirements. So here legal provisions, we are having a section 16 that says about the eligibility and the conditions for taking output. Then section 17 says about the apportionment of credit and blocked credit, which is eligible and which is not eligible. So these other sections I have given only for the additional information, but of late you have to understand definitely section 16 and the section 17 only, very important sections. Then we are having a rules. In rules, these are the important rules, but however I am going to take which are the very, very important for your day-to-day efforts. There we can call document evidence is required. Then reversal of input credit, there's a requirements. Then claim of banking and everything is a different. And we are having a rule 41 and 42, 43. Here it is the when you are using input tax credit on account of the taxable and exempted turnover, there you are liable to reverse a certain credit, that we are having the rule 42 and 43. That is also important rule for your day-to-day this. Then 86B is restriction. How much I can use, whether I can use 100% or there is a restriction. Then order of utilization, how I have to use the ITC credit given to me. Then manner of calculating, that is another major issue. And manner of dealing with input credit, that is 88D is a very important, that also now assumes very much significance. So some of the important definitions you also expected to know when you are going to handle your ITC credit. I have given all these things, but some of the things are which are most relevant are capital goods. So you are allowed to use capital goods, means the value of which is capitalized in the books of accounts. So it does not distinguish anything about it. Says means goods. It says means goods, the value which is capitalized. So it may be goods or services which is capitalized in the books of accounts. So any expenses you are capitalizing in the books of accounts as capital expenses, then that is deemed to be called as a capital goods. Then credit notes, which is issued for the reduction of your input tax credit, and debit note, which is increasing you are eligible for the more credit on account of the additional liability created by you the supplier. Then cash ledger, credit ledger, these are the available in your portal. to verify what is our tax ledger availability and the credit ledger availability. And we want to know about the input. What is input? It is called other than capital goods and intended use for the furtherance of business. So any input other than capital is called a goods. And we are having a services, anything whichever is not is goods or not a capital good, not is called as a input services. So you should understand what is input services and capital goods. Then one more definition you are expected to know is a exempted supply, because when you are manufacturing or you are involving trade, there is every possibility you can sell taxable goods and also non-taxable goods, which is called it exempted goods. So we want to know what is a exempted goods, which means which you does not pay any GST is called a exempted goods. So whenever you are selling a goods which is not taxable or nil or outside the purview of GST law, then you will be called as a exempted. So you are entitled to avail only proportionate credit if you are using the common credit. And also you cannot use which are exclusively used for the exempted supply. So you should understand what is the definition for that. Then input tax, what is a related good? They say that is integrated tax, whatever the input tax credit. What are the eligibility? You can get IGST, tax paid on the provisions of section 49, that is called your RCM, and as well as a direct tax, that is a FCM, forward charges, and also some of the taxes paid on account of integrated tax and your union territory tax and SGST also eligible, but does not mean credit tax. Then invoice. So there are documents which is necessary to avail input tax credit. There they given an invoice. What is a tax invoice means? Tax invoice referred in section 31. Inward supply is the supply you are receiving for your furtherance of business with or without consideration. And non-taxable supply, already told, it is as good as a exempted supply. Then output tax is nothing but the tax you are liable to pay the output tax, output supply or goods or services or both. You may be selling a goods or you may be providing a services on which you are liable to pay tax as per the provisions of section 9 read with relevant notification 11 of 2000, that is 1 of 2027 for the goods and 11 of 2027 for the services. So here these are the some important definition. And RCM, reverse charge, means where certain goods or services, instead of the liability paid by the supplier, here the liability is on the recipient, that is governed under section 4 of section 9 subsection 4 of the section 9. So this is also you should know, because your liability on account of your GST is one, outward supply, and second, inward supply, which is considered to be the RCM liabilities. So these are the some of the definition you are expected to know before you are venturing for the GST, availing ITC credit on account of GST. Then some of the important circulars, you can very frequently visit your CBSE website. Then circular 98 seeks the clarity of use of 88A, how you have to use your ITC credit, cross utilization or utilization of ITC credit. We will be elaborately discussing in this screen to come. Then circular restrictions on availment on account of the 36(4). There are some restrictions also issued, that is we should know what are the restrictions. Then demand and penalty, there may be now one of the biggest problem the government is facing is the fake invoices. What is fake invoices? Supply of the goods or services without supply of any goods. So just they will be trading the invoices only. They will not physically supply any goods or provide any services. So that becomes the biggest concern. So there are so many cases registered. So the government has given a clarification how to handle that. And there are some more clarification about the blocked credit and input tax credit, and also there is a 2A 2B mechanism, that is 183. All these things are for the earlier period, so I am not elaborating this. Circular number 183 and 193, which are necessarily for the period 2017-18 to 1920 only. Then now 22 onwards we are having a different scenario. So for that we are going to, this session is only for the latest issues governing input tax credit. So now let us move to the important sections of the availing ITC, that is called your section 16. So section 16 has four subsection. One is 16.1, seamless credit, how you are eligible to take the credit. 16.2, condition to avail credit. Which are the conditions I have to understand before availing my ITC credit. Section 16.3, additional conditions for the capital goods. Then 16.4 is the condition for the validity of the document side. So these are the 4 important subsection which is more important for your section 16 for the availment of ITC. Then 16A, what is the condition? It says the recipient must be possess a tax invoice or debit note issued by the supplier. That is the first condition. Second, the details of effort should be given its outward communication, which should be available in your GSTR 2A or 2B. Now 2A is not there, now the GSTR 2B. So it should be reflected in your GSTR 2B. Then you should definitely receive the goods or supply the received services. If it is not that, then you have to keep the ITC pending. So this condition says you should be definitely, before availing credit, the goods should have been entered into your production or your purchase ledgers. So that is very much important. And the supply communicated to 38, which means not restricted. So whatever the goods is not restricted, that is another condition. Then your supplier should have been paid the tax to the government. Here, very times, even though we are having the GST or 2B, the payment to the customer, that is whether the person has filed return or not, is communicated. However, the same information is available in the GSTN portal. If you go to the portal, search for the taxpayer, you can find a return filed status. There you can find GSTR1 is filed, GSTR3B is filed. If GSTR1 and GSTR3B is filed, you are safe. If he has not filed GSTR 3B, it is not possible to take credit. Similarly, if you received the invoices, but unfortunately your supplier has not uploaded the GSTR 1, there also it is not possible for you to take the credit. These are the important conditions. Then these are the 5 conditions which is essential. You should receive the goods, and also you should be possession of the documents. Then the person should have been paid the uploaded the invoices in GSTR 1 or 1A or invoice that is invoice furnishing facility. There are 3 returns are available. Then that should be reflected in GSTR 2B. Then after that you have to abide. Then only your eligibility comes. Then other conditions. So even though you received everything, if you are not paid any amount to the particular party, you are not entitled. You have to reverse the credit. If you are not paying it within 180 days, it is very much in work for the MSME sector. Now income tax also making it that the MSME sector has to receive the due amount without any pending. So here, similarly in the GST scenario, they told if you have not paid the amount 180 days for the value and the taxes, the person who has availed the ITC has to be reverse it along with interest. If does not done, he may be liable to be penal action as per the provision of section 73, 74, 122, whatever this may be possible. Then reavailment, even though if you are not paid the amount, you are reversing, subsequently you can avail the credit once you pay the amount to the MSME sector. Then there is an important restriction. In the case of capital goods, either you can avail the benefit on account of depreciation or you can avail the benefit on account of ITC. Both cannot be availed. So you have to ensure, you can also, your auditor will check this issue. So find out whether you are availing the capitalizing or you are claiming a depreciation on the goods for the avail ITC portion, that particularly ITC portion. Then time limit. So you cannot wait till 1 year, 2 year, 3 year. So on or before the next financial year, November, you have to avail ITC credit for the invoices and the credit notes and debit note issued during the period 1/4/2000 onwards. Suppose your invoice is 1/4/2024 and you can avail ITC up to this month 30 November 2025, which means your October, up to your October return, you are entitled to take the credit, because there may be some disputes, you may not be properly filing. So this you can take at least 19 months, 18 plus 2, that is 20 months is available for you to avail the ITC credit, even though the goods are received for the previous financial year. Then sometimes you will be availing ITC credit, but unfortunately the person's registration would have been cancelled. In that scenario, if he files a return within 30 days from the revocation order, you are entitled to avail. That also you have to check out. Then one more condition is 16.4. Now we told the 16.4 is nothing but the November 29. We told, for the period we can avail only up to the November 2000 of the next financial year. Recently the law was amended for even 2017 onwards, 2017-18 to 2021, they can avail up to November 2021. If they avail, they are entitled. that restriction is not available for the period 2021-22. So 2021-22, the last period is the November 2022. Now also November 2025 you can avail for the period financial year 2024-25. So this is a restriction condition. And now we are moving to the section 17. So once you understand which are the items eligible, then there may be some occasion also arise. There are some conditions where you are not eligible for the ITC. So section 17 prescribes which are the such scenarios wherein you are not entitled to avail ITC credit. Okay, then we can. Sir, please kindly tell me what is the time limit. Now it is 15:48. Please kindly, 1 hour means at what time I have to complete. Okay. Synopsis of section 17. This has 5 sections. So apportionment, when the common is used, the common ITC can be possible for the business and non-business, and also business and the exempted supply. These 2 things are important. And determination of value of supply for the exempted, how to apportionment has to be done. That is determined under section 73, and section 75 is a blocked credit. So now we are going to see about the section 17.5. So ITC available is only for the business purpose, taxable supply and zero rated supply. ITC is not available other than business purpose, non-taxable supply, exempted supply, nil supply, and a non-GST supply. For these supplies, you are not eligible to avail ITC, which are exclusively used for this type of supplies. For example, I am a dealer in agricultural produce. But however, I have to purchase some packing material for packing these materials. Whether I am entitled to avail ITC credit? No, because my final product is fully exempted. So I am not able to avail the ITC. Whatever ITC I pay or whatever tax I paid on account of the packing materials. So here ITC not available if it is exclusively used. But however, I purchase some packing materials which is used for packing the taxable commodity and also for the non-taxable commodities. Fine. How do I avail credit? Sir, I do not know. I have purchased only without any brand name, some packing materials. So finally, how I have to determine there is a apportionment rule is available, that is called your rule 42. Then based on the rule 42 working, you have to reverse the credit which are exclusive, that is used for the common ITC. That we will check up later. So here, this is the total credit available for any particular person, exclusively taxable, exclusively exempted, exclusively non-exempted, ineligible common credit. So this is your 2B. If you open your 2B, you can find the total credit coming to you in your 2B register. 2B is exclusively taxable, exempted, exclusively non-business, ineligible common credit. So out of this, you have to determine which is not eligible to use by you. That is our major challenge that will be handled by rules 42 and 43. So blocked credit. So this is the biggest problem every industry is facing today. Inadvertently, they are availing this credit and later they say they are unexpectedly receive some so-called notices. The department asks you to pay huge amount on account of the incorrect availment along with interest and penalty. So in order to avoid, you should understand definitely blocked credit under section 17.5. It says there are 4 categories. Whatever the goods which are used for the personal use, not eligible. And there are restrictions on account of the immovable properties. Then inward supply not used for the outward supply. And there is a miscellaneous issues also available. You can note out the list of items which is covered under section 17.5. So motor vehicles. So ITC is not available for the motor vehicle used for transportation having seating capacity less than or equal to 13%. So you are not entitled to take any credit on account of the vehicle which is a less than 13, which means you cannot avail any ITC on account of the 2-wheelers and 4-wheelers. So that is the important aspect. Food and beverages. So these are personal consumption, food and beverages, outdoor catering, beauty treatment, health services, and cosmetic and plastic surgeries. So this also, even though you spend this amount and there is a tax liability, you cannot avail ITC. These are the second categories. The services of the general insurance servicing, repairs and no ITC allowed sources of general insurance service, which are used for the related to motor vehicles, vessels, and the aircrafts. Then sale of memberships and health. So here no ITC allowed on the membership fees given for the gyms and clubs, diners club, all these things. is not eligible. Rent-a-car, life insurance and health insurance also not eligible to avail ITC credit. Okay. Then travel, ITC is not available for the travel benefits extended to the employees. So any travel ticket booking not eligible, train ticket booking not eligible, flight ticket booking not eligible. So all these things are not eligible. Then works contract. The works contract relating to the concession of immovable property is not eligible. So whoever I am purchasing a cement and you can say steel and I can purchase some other material, tiles and everything, and I'm constructing a building which is going to be used for the furtherance of business or some factories. So all immovable properties relating to this civil does not eligible. We cannot take the credit. Then plant and machinery you are eligible, that is nothing but your machinery which is used for your production. Then composition scheme. So no ITC is available for the dealer, he is under the composition scheme. Then no ITC for the personal use. I always explained. Free samples and destroyed. So here you have to understand whatever the goods which is lost or stolen or destroyed or written off or given as a gift or free sample, you cannot have an ITC. Many people we understand they are asking for the queries are my goods are stolen. You can register FIR, you can claim your that is insurance, but definitely you cannot you have to reverse ITC on account of all these happen. So here that is very much important, because recently I had an occasion also in the Kerala field, that is a flood. Some of the people lost their machineries and destruction happened. But unfortunately, the law does not permit them to avail the credit. To the extent of whatever is lost input or these things, they have to reverse the ITC. There is another big flow, but still the law says you have to, even the goods stolen or destroyed, you can claim only your insurance claim and definitely not on the ITC. Then ITC on the fraud cases is not available. That is also another major issue. So these are the some of the important sections. I am not going for each and every section. I have taken only two sections, only section 16. Another is a section 17. Once you go back to your respective organization, if you are handling GST, kindly go through each and every section, understand these things. You can also having a umpteen numbers of articles available in the net to expand your knowledge on these legal provisions. Now let us move to important rules. I have given several rules, but we are going to take only very few rules. So here it is a 36. This rule says there are conditions for availing the ITC credit. It says what are the documents you have to use. Then there is a restriction how it has to be available. So this rule is very much important. So as per this rule, the documents for ITC availment: inward invoices, credit notes, debit notes. So inward invoices available, you can take credit. Credit note will reduce your ITC liabilities. Debit notes, it will increase your ITC liability, ITC requirement. So here, the first and foremost thing you require for availing ITC is three documents, which is a inward invoices or inward tax invoice, then credit note or debit note. If you are a person eligible for for coming under the e-invoice facilities, you should also issue tax invoice in e-invoice format. For the invoices you are supplying, credit note you are giving, and debit notes you are giving, all these you have to mandatorily make it as a electronic format and submit to the e-invoice portal. Then tax paid on RCM. There, for the registered and registered person, you should have your own document, self-invoice. So you can, based on the self-invoice, you can avail the ITC. Then imported goods. Then you can say imported goods, there is a bill of entry is available. This bill of entry is possible for the air import or sea import or land import or courier import. Courier import, you please also all these things, the bill of entry is available. And similarly, if you are importing or getting the goods from the SGZ, you are having the bill of supply, which means they will be sending you what is the bills similar to bill of entry. They will also issue a bill that will be format for the bill of entry or bill of supply, that you are based on that you can avail ITC. Import of services, that is RCM payment. So your self invoice is the document. And input credit distributed, there is invoice prescribed by the input tax recommended is IST distributor. So basically, you please, before availing your ITC, check which document you are having. If you are having any pro forma invoice or you are having the estimation slip All these things are definitely not a document entitled to avail ITC credit. You should have a tax invoice, definitely. And apart from that, there is a rule also prescribed what are the information should be available in the tax invoices. There, your GST number is essential, other person's GST number, your name and address, your additional premises, what is the HSN code, what is the description, what is the tax rate, then what is the components of tax. Everything should have been available in the invoice and should be signed that is physically or electronically by the authorized person. So all these things are very much required. Then I am listing out invoices issued by supplier, debit note raised by, bill of entry, and invoice issued on certain circumstances. Then invoice of credit note issued by the input service distributor, a bill of supply issued by the supplier of goods or service or both. These are the documents. So once you take avail these documents, then you can go to your financial accounting. You can say the financial accounting and ITC. So financial accounting, we are going to report in GSTR 3B and report in GSTR 9 and GSTR 9C also you are going to. And you are going to intimate this also availing ITC or RCM. Then exchange differences also you are liable. Inward supply, RCM, all these things you have to report in your financial accounting, and thereby you have to give various returns GSTR on 3B and 9 and 9C. So financial account and the GST returns, books of account, your purchase of inward supply, then that will be reflected in your GSTR 2A, GSTR 3B. Then based on which you are availing your GSTR 3B. Based on that, you are making your GSTR 9. Based on that, you are giving a GSTR 9C, a reconciliation statement. So this is your flow for your from purchase to 9C. So each and every place, please take care. They ensure that everything is properly coming. If it is not properly, then at any point of time you will be chance of getting a notice from the department or seeking a clarification why you are not followed the legal provisions. Once again, then so restrictions, October 2019 onwards, they have given restrictions. Even though there is a goods are received and invoices are uploaded, initially they allowed up to 20% set off they have given. After that, to the extent of 10%, it may not be possible, you can still avail. And after that, they reduced it to up to 5%. The tolerance was given up to 5%. But from 1/1/2000 onwards, there is a clear rule. If the details is not available in GSTR 2A or 2B, you cannot avail the ITC credit for that month. So which means you can avail subsequent month, not for the same month, whichever, which means only the invoices which are reflected in 2B, which you are entitled as per the above said legal provisions only allowed as this. Otherwise, it is not possible. Please take it a definite, clear note. So this was GSTR1, GSTR2A, GSTR3B. So e-invoice or e-way bill, then GSTR1, GSTR2B2A, and GSTR3B. So this is the your requirement for the 36(4) compliance. So if you are purchasing goods, you should have a e-invoice or e-way bill. Then that should have been reported by your supplier in the GSTR1, and that should have been available in the 2B and the 2A. Then only you can go for the GSTR3B. So please inform your accounting person who is handling ITC whether he is aware of all these things. Otherwise, give him a proper training to understand the legal provision so that you need not be worried. Otherwise, at any point of time, you have a notice from the department. Then reversal. I told earlier, this section rules 37 says, if you are not paying 180 days, you are liable to reverse the credit along with the interest. So here, the rule 37 says input of reversal of credit in case non-payment of consideration. So once you pay the amount, then proportionately you can take the credit. But unfortunately, you are liable to pay interest also. The interest will come from the date of availment. You have to, when you have to reverse after 180 days, if still you are not paying, you have to pay this. Please see in the balance sheet, you are also reporting what are the pending sundry creditors, whether it is a 180 days, the classification is there. You kindly check out whether there is a more than 180 days is there. If more than 180 days, if they are covered under the GST, then you have to definitely reverse the credit and along with the interest from the date of availing. So unnecessarily there will be an interest burden and your reversal burden. So please take care of that. But however, if the payment is subsequently made, the reversed ITC can be taken, but you will be losing on account of the interest. That's all. Then reversal of the 42. I told if you are using a common credit, both your common credit, if you are using for taxable supply and exempted supply, then you have to apportion, which means that is governed by the rule 42. The rule 42 says there are two occasions, business and non-business, and the taxable and exempted supply. What is business and non-business? I am an auditor. I am having a rented place that I am using as my office come residence. For the total area, I am paying say 1 lakh rupees. And the person, since being the commercial complex, he said he had to pay 18% as a GST, and he gives for me 1,800 rupees, 900 plus 900 rupees as the rent. That is our IGST. See, the tax. Now I have to avail ITC. Suppose the total floor, 2 floor is there, 1 floor I am using for office, 1 floor I am using for the resident. Now, based on the total turnover or the total whatever the methodology, the turnover we can say if it is 1,000 square feet is used for office, 1,000 for the commercial address auditing, I have to avail or I have to reverse ITC to the extent of this 100, that is a portion used for the non-business purpose. That is one. Second, I told I am manufacturer, I am using a cap, I am also seller, I am also selling the taxable commodity and exempted commodity. For example, I am a multi-store, that is you can call your mall, where I am selling a supermarket, vegetables also I am selling, milk also selling, I am also selling other. Suppose if my turnover is 1 crore and say here 50 lakhs is on account, 50 lakhs is on account of my taxable turnover, 50 lakhs is my exempt turnover. Assuming I avail ITC credit on account of the common inputs like auditor fee, then rent for that premises and security agencies and the computers used, stationaries used. So all this put together comes around 50,000 rupees ITC avail. Now what I have to do? My total turnover is 1 crore, out of which 50% is my taxable turnover, 50% is my exempted turnover. So if I'm having a 50,000 rupees as a input credit, I have to reverse 25,000 rupees. This 25,000 rupees every month I have to report in my GSTR 3B in table number 4B. Then only I can avail my net ITC. If I am not doing that, then the department will ask you to pay the reverse ITC along with interest, and you are also liable for the penal action as per section 73. So this is all about analysis of the rule number 42. So this PowerPoint will explain each and every step, but the fact remains what I explained these things, it is nothing but a proportionate credit reversible on account of the ITC availed for the common. You will be aware there may be many number of so-called notices issued where the department has taken entire ITC. So what you are do is, instead of asking for the entire ITC, intimate your officer, sir, after this amount, only few amount is coming for this, balance amount is not for the exempted commodity. So I am segregating, I am giving the list of common ITC. I am ready to reverse only to the extent not the calculated by you. Please do this. Okay. Then we are having the another rule is 43, that is called your that is your capital goods. In the capital goods they have given another formula. So they have taken the life of a capital goods is 60 months. Suppose you are having a packing machine, so it packs your both taxable commodity and exempted commodity, and the total credit available is say 1 lakh rupee. So what happened? Or 1,20,000 we can have for ourselves. So 60 months, which means every month I am entitled to take 5,000 rupees. Out of this 5,000 rupees, what I would do, then I have to calculate my exempted turnover divided by total turnover into ITC for that month. Entitlement is 5,000. So proportionately I have to reduce this ITC and report in my GSTR 3B. This is as simple as rule 43. So this also I have elaborately discussed for you this thing. Once you go through this particular slide, you will be able to understand. This slide will be definitely help you as a work, that is a handbook for availing ITC credit. Though I'm explaining all these things, I have given you to for leisurely to read each and every provisions. Then 60 months concept I explained. I told how it is done. Then another important rule is rule 88B. So what this rule says, I'm every month I'm getting my input tax credit. I'm accumulating the credit. My normal inventory is 2 to 3 months, or it may be 4 months. I am not exporting any goods. So in that scenario, I may not be paying any amount in the cash because I'm always having a sufficient balance in my electronic credit ledger. But the department said, if you are using 100% ITC, you cannot use. You have at least pay 1% in cash. But this decision does not applicable if a person is mentioned paid more than 1 lakh in the income tax. If you are a company, if you paid more than 1 lakh in the company, it will not. If it is a property company, if you have paid 1 lakh rupees income tax, and if it is a partnership company, the partnership company, not partners, the company, partnership company should have been paid income tax more than 1 lakh. If it not, then you are liable to pay 1% on the cash. So this is all about rule 88, 86B. Then 88A, this is also important rule. Here it says how I can use my ITC. I am entitled to take ITC on account of IGST, on account of CGST, and on account of my third is my sales tax, that is your SGST. So they say how I have to use this. So first you have to use the IGST. So if you are having the amount in IGST, even though you are having a CGST, SGST, the department says first exhaust your IGST, make it zero, fine. If you are not able to, after making it zero, then you have to use your CGST and SGST. So that is your first. Suppose you are having IGST, not having IGST. I am having only CGST, SGST means okay. Use your CGST and IGST for the purpose of IGST. That is also possible. So ITC can be CGST can be used for the IGST also. But you cannot use this for the SGST. Similarly, in the case of SGST or union territory, this can be used for your IGST purpose, but not for the CGST purpose. This is called a cross utilization. CGST, ITC cannot be used SGST, and similarly SGST, UGST cannot be used for the CGST liabilities. So this is called a cross utilization. Then first is called your order. Please note here, when you open your computer for this GSTN portal for 3B, it will be working automatically. But it may not be beneficial for that. You have to carefully analyze whether you have to modify the cross utilization. Otherwise, if you accept every system, finally you will be land up with payment of tax even though you are having a sufficient balance. So you should be very careful in that. Then 88D. This is another biggest challenge. Now it is coming. When you are availing your ITC credit based on 2B and based on actual receipt, sometimes there may be a possibility of problem. Your buyer may not be uploading. Say for example, in 1 month, you are liable for you say as per your records, you are entitled for around 2 lakh rupees as a credit. Unfortunately, you find in your GSTR 2A that month you got only 50 lakhs rupees. No other option. What you have to avail? You can avail only 50 lakhs. The next month you can find you keep everything, and next month you are going to avail the balance 1.5 lakhs. That month your credit is only 20,000. Now you are going to avail 1 lakh 50 opening plus 20. So suddenly there is a 1.7 lakh. The system will verify whether this auto-generated ITC is more than 20% of the ITC, then it will immediately issue a notice. Please understand. Therefore, you should be very careful whether your ITC available this month goes beyond 20% means please keep ready your explanations. This explanation has to be issued within 7 days. If you are not issuing these explanations, what will happen? You cannot file your ITC, that your returns, your e-way bill also blocked. So this is a danger. So every month before availing ITC, before putting your final, please understand whether the ITC availment is correct, whether there is a sufficient reason to avail extra amount. There you can find this extra amount here. With these are the reason. This is called a DRC1. Difference in GSTR 2A and GSTR 3B. Intimation will be sent in Part A in form DRC 01C. reply within 7 days, pay the differential tax if it is necessary, or explain what is the reason. If the explanation is accepted, it will be closed. If no explanation is given, proper action or proper explanation, then action will be taken under section 73 or 74 for the recovery also. This is very much important. So here, what are the brief reasons you can give? So goods in transit, you can give input credit not availed for the earlier period. For the imported goods not properly mentioned, inward supplies from SGZ, excess reversal is possible earlier, non-payment within 180 days you are availing. So these are the reasons you have to give while you are submitting your reply in part B. If you are submitting these replies, then you are eligible for the ITC credit, which is, even though 20% more than your normal auto populated. Otherwise, you are liable for action. Then refund. This is important. So, okay, sir, I'm happy. I understood some of the legal provisions. What I find is there is a huge accumulation of ITC credit. So, whether I'm entitled to take any credit which is unutilized in my books of accounts in the electronic credit ledger, am I entitled for the refund? Yes. There, these are the scenarios. This legal basis for your unutilized refund is defined in section 54.3. Then detailed procedure is covered in rule 89 or rule 97A of GST rules. Refund claim is permissible when accumulated ITC is not utilizable against outward tax liability under the scenarios are permissible scenarios: import, export of goods without payment of tax, either supplied to SEZ or supplied to physical export and LUT. On account of that, there is accumulation, means you are entitled for refund. That is first case, which means no tax paid is at the time of export, but refund of accumulated tax is possible. Depends upon your strategy, means whether your rate of tax is 5% or rate of tax is 0% or rate of taxes is 28%. Depending upon that, you have to understand how best whether accumulation is taken. Mostly, if your that is final product is zero rated and everything, then your this then you can go for your LUT payments. If the difference is also 18% input, my 5% is my output tax, there the benefit will be you can go for the refund on account of the accumulated ITC instead of payment of IGST. So you have to decide which is beneficial based on your tax rates for the input and the output. Then similarly, inverted tax structure also possible, either export or inverted tax structure, which means you purchase your goods at the rate of 18%, 28%. Unfortunately, your goods of output supply only attracts 5%. Definitely, you are going to accumulate and is possible. In such scenario, also government allowed credit with certain restrictions. All the goods are not permitted. There are some restrictions. These are the goods, even though it is a lower rate, no refund is possible. And there are some restrictions. The credit can be given only, refund can be given only on account of the inputs, not on account of the input services and the capital goods. These are some restrictions. So here there is a permissible scenarios for the refund of unutilized. Situation where refund is not allowed. If export duty is imposed, no, not possible. If you claim a drawback, that is not possible. Refund of IGST paid, if you paid IGST, then it is not possible for the same shipping bills. Capital goods, not allowed. Then blocked credit, not allowed. So you'll be happy if you understand these legal provisions. What I find during my consultancy is many people may not aware of these ITC utilizations, and end of the 2 years they will come for me, sir, how to get the refund. So the important note on this or precautions for this getting refund is must register as a regular person, not a compensation. Refund application be filed within 2 years from the relevant date as defined section. Then return should have been filed, should not have defaulted the payment. Claim only eligible credit reflected in 2A to B. Ensure credit is not related to blocked or capital goods. Maintain proper account. In case of inverted refund, must not be nil rated. So these are the precaution you should take before filing your refund claim. If you are satisfying all these conditions, definitely you are entitled. I am also handling so many refund cases. Like you can say export, we are getting regularly. The inverted tax structure, we are getting. Oil industry, we are getting. And we are getting ITC, there is a refund on account of the yarn mills we are having. And some other commodities also, it is possible. So you can get the refund on account of the accumulated. But if you are not done a proper valuation also, you will be having the accumulation. So you have to ensure that how the accumulation has been taken. If you have gone for the major expansion of the capital goods and you are not having any export and you do not have any other inverted tax structure, no possibilities. There will be definitely accumulation can be used only for the future purpose, and you may not be able to get any refund at all. Then I avail ITC credits are now I have to how to report this ITC availment and utilization. For that we are having GST returns. So GSTR one return, that is nothing but your outward supply. You have to mention your what is outward supply. But GSTR 2A and 2B is very much required. For you people, those who are availing ITC should definitely understand what is 2A and 2B. These are nothing but a report the returns which is based on the outward supply that is submitted by the GSTR1 by your suppliers. So GSTR2 is a dynamic, which means each and every day it can be modified. But 2B is nothing but it is a static, which means auto-generated, only available after 14th. So it will be freezed once the 11th day is cut off. The 11th day for the filing of return is over means it will not reflect anything. That will be go to the next month only. Then 3B, you have to report in GSTR 3B for which you are having a specific table. Table number 4, 4A consisting of availment, 4B consisting of reversal you are making on account of the for rule 42, 43 and 17.5 and other cases like where you are not pay the taxes on account of 180 days. 9C, the 9 also here we are giving the detailed information about your all tax credit available, whether it is import or it is a capital goods or services, all these information he has to give. And 9C, your auditor, you have to reconcile your 3B and 9C based on your financial records. So that is a very much required for. These are the returns which are connected with your GST, that is input credit availment. Then reporting GSTR 3B, where we can find from July 2022 onwards, everything is modified. Now you have no further action. You have to strictly follow the notification number 14 of 2022 and read with circular number 70 by the issued by the CBIC during July 2020. No other option. This is a very, very strict actions will be taken against if you are not following it scrupulously. So this is a return format. So here it was earlier written, now it is modified. So here ITC reverse as per 3842 has to be definitely you have to give. Then whenever goods in transit, you have to mention you are not available in table number B2 and subsequently that will be reclaimed pending in your register, that is electronic credit ledger. And whenever you are availing that, you have to show this information as 4D1. Correspondingly, you are also include that amount in 4A5. This is the modified return with effect from August 2022. Now, if you are a MSME sector, they have given a facility which is called invoice management system, a friend in need. Because I studied in depth and I'm saying all my MSME clients or wherever I'm taking the training session for the ITC, I ask them please follow it scrupulously so that your problem on account of the ITC will be 100% solved. You need not worry about any query from there coming from the department. You are at the time of availing ITC, you are informing the department about your complaints intention, on which invoices you are availed credit, on which invoices you are not availed credit, and which invoices you are keeping it pending for the future availment. So that's why this invoice management system is a very good for the MSME sectors, a friend definitely. So GSTR generated will be generated on the 14th of every month. The report is available. Then you can accept or deemed acceptance or reject, which is reference only not showed in 2B. Then action for the 2B must be modified in GSTR 3B is filed, can be recomputed multiple times until 3B is filed. Incorporating any updated version actions and invoices can be downloaded in Excel format for analysis and record keeping. So these are the important features. Developed this new feature and it is available from 1/8/2022 to enable effectively address the invoice corrections amendments with their supplies through the portal, the new communication process, right? The said function would major enhancement for the availment of ITC. Taxpayer an opportunity to review the genuineness and authenticity of records will be available from 1st October, I told, from the portal onwards. So these are the advice given by the GSTN portal. Go through these advisories, then you will be definitely knowing what is best possible, how you can file your IMS without any hiccups or without any botheration. That is very much important. So salient features, you have to take action. Once the invoice is coming in the dashboard, it will be given as the no action. So no action means deemed acceptance. Then what you have to do, verify the invoices. Which are the invoices you want to avail invoice, you can say accept. Which are the invoices you do not want, you can reject. It is not meant for me, I do not want to avail. Third, keep it pending for the later. I do not know whether goods are received. My factory has not updated. I am having a dispute with the person. So the goods in transit is also possible. Then you can meet. IMS facility is a real-time management. So each and every day, whatever the invoice is uploaded immediately, either through e-invoice portal or some other portal, then that will be reflected in the, then that will be possible. You can view only from after 14th of the next month. Non-mandatory, though it is this thing non-mandatory, best you can use. If you are having a for more than 500 invoices, it becomes a non-mandatory, because at present there is no provision to view or download the entire more than 500 invoices on which ITC has been filed, because they will give only 500. So you will find it difficult. For that, they are not given any offline utility. So if it is less than 500, you can do all these things. Then flexibility also. You can wait. Today you can approve, tomorrow you can decide, we can verify, and before filing your GSTR 3B, you can umpteen times modify the action required, either keep pending or you can reject or you can also avoid. So that is possible. These are the very much important features of the IMS. Then reconciled process. That means you can also verify whether these invoices are reflected, and you can keep it as a document for the department. Whenever department asks, you can provide these are the, then it enhances ITC accuracy. Since you are aware of ITC availment, now you only have the eligible ITC in your electronic credit ledger. So the department cannot unnecessarily issue so cost notice for the incorrect availment. So that is possible. So here it is a convenience, availability of date, everything is available 14th afterwards. So it is a very much useful feature enabled by the GSTN. So records available, these are the records available. Place of supply, section 14 is also indicated. So you can also keep it pending. So IMS inflow, original invoice, debit credit notes, then filed or served in the GSTN portal, then IMS dashboard. Ineligible due to place of supply 16.4 will not form part of IMS. IMS is not eligible, ITC is not eligible on account of these two. Then IMS dashboard will come, you can accept, reject, pending. Then that will be accepted, this it will be auto populated in GSTR 2B. From GSTR 2B, it will go to the GSTR 3B. This is the process flow for the IMS. Action, accept. The invoice will become part of ITC. Reject. The invoice will be moved to the ITC rejected and not populated in the GSTR 3B. So careful, you should be when rejecting. Pending. Remain in the ISTN portal. Still the future action is completed up to the next fiscal year. No action by default, without any action will be deemed to be accepted. நார்மலாக சொல்லுவோம் இல்லைங்களா, மௌனம் சம்மதுக்கு அடையாளம் சொல்றோம். அதே மாதிரி என்ன ஆச்சுன்னு கேட்டால் இதில் தமிழ் வந்து தங்குறீங்க. So whenever you say it is accepted, no action is deemed to be the I am accepting it. So that is the reason. So here by default, it will be deemed to be accepted. So this is the IMS screenshots. I think for many people have already seen that. So there is IMS system dashboard is available. So you have to click that. The next screen will show you the view the inward supplies. The next screen you can see these are the today's scenario about the IMS dashboard. No action, there will be 99, accepted 0, rejected 3, pending 15. So total together 19 plus 15, I will be having a 114 actions I have to take. Whether that 114 action, what I have to action, I take action to be completed based on the my action or rejection or pending. So after that, once you make it as 0, then compute your 2B, then it is auto computing will be enabled. Then windows for the screen titan, this will be accept or reject, can also seen, visibly seen. So filters to search this information is also possible. Then more filters also available for the easy to navigate from the number of records available. Please, a warning, don't keep anything as a no action, because no action means accepted, then it is difficult. If you do not know anything, keep it pending for the better for the future references. Flow of the accepted GSTR2B, GSTR2B goes out of IMS. History. Rejected, not reflected in GSTR2B and GSTR3B goes out of system. Again, it is saved in somewhere. Pending, kept in IMS data up to 30th November of the next year. Next physical, you can avail at any point of time. No action, goes to 2B, goes to 3B, goes out of IMS. So this will show you what action I do to handle each and every invoices available in IMS. So recovery and penal provisions. In spite of my best effort, there may be possibilities I missed or I avail excess ITC on account of human error or inadvertently due to my lack of knowledge. In that scenario, the government will take action. If it is an innocent action without any fraud and willful misstatement of facts, then recovery will be taken against section 73, where the tax and interest and penalty will be levied. Tax interest 18% and penalty is 10% on the tax. That is ITC to be reversed. Assuming that you are having a sufficient balance in your electronic credit ledger, there is no need for any payment of interest, but however, you have to still reverse the ITC. Assuming that there is a section 74, there is a suppression, then you are liable to pay the tax, interest, and also penalty equivalent to the ITC avail. That is 100%. Apart from that, if the availment is on more than 5 crores, please note you will be liable for prosecution and arrest also. So that is the wrongfully availed recovery proceedings. And the penal provisions, I told 73.9, 10% or 10% of the 10,000, whichever is higher. 74, 100%. Apart from that, 122 you are having, and 132 punishment for the arrest in certain cases. So all these things are possible. So please be careful about your ITC availment. If it is innocent act, no problem. Otherwise, please, you should be take a call. Okay, sir, in spite of that, what do's and don'ts? But I have not given do's because it is available, but I have given a don'ts. So these are the don'ts while availing our ITC should be definitely kept in mind. Do not avail ITC without a valid tax invoice or debit notes or bill of entries or specified documents. Don't claim ITC if invoice is not reflecting in GST or 2B. Don't take ITC on pro forma invoice or purchase orders. Don't avail ITC before receiving the goods or services. Don't claim ITC if the supplier has not filed GSTR on. Don't take ITC if the supplier has not paid the tax to the department by way of GSTR 3B. Don't forget to reverse if payment is not made within 180 days. Don't claim full ITC when only partial payment is made, reverse proportionately. Don't avail ITC on blocked credit like motor vehicles, food, beverages, etc. under section 17.5. Don't claim ITC on capital goods if depreciation is claimed on the tax component. You have to understand which is beneficial, whether it is ITC is beneficial or income tax beneficial. Don't claim ITC on personal or non-business expenditure. Some of the people I find for gold purchased, saris purchased, wherever they go, they will just like that give hand over the GST number. And finally, they will avail. சார் எங்க பொண்ணு கல்யாணத்து வாங்க நகைக்கெல்லாம் கூட நான் எடுத்திருக்கேன் சார்ங்கிறாரு. என்ன பண்ண முடியும்? So that is wrong. So you have to understand whether personal or non-business. Don't use ITC for exempted and nil-rated supply. We have to have a check. Don't use duplicate invoice to claim ITC more than twice. Don't claim ITC after time limit. அதுவும் பண்ண முடியாது. Don't avail which are lost, stolen, destroyed or written off. Don't avail if ITC is registration has been cancelled. Don't claim ITC on reverse charge supply without paying the applicable tax first. So these are the things to avoid while availing ITC. For your future references, sir, I want to enlighten myself with all this information, sir. Today's session, it is rushed or it is a very minimum. Otherwise, You have only rekindled us or enabled us to understand what is the minimum legal requirements for my day-to-day work. But I wanted to study it in depth. Then please visit tax information cbc.government.in. This portal gives a complete legal provisions and circulars issued by the Central Board of Excise and Custom and Central Excise. And similarly, for this, we are each and every state government is having their own state taxation portal also. Then IDC, that is your IC and ICMI, both these organizations, that is a cost accountant and chart accountant, are very frequently filing the publishing relevant provisions of law or specific subject. I have taken so many times information from this to enlighten me about the legal provision. So these are the references very much required for you. So before sending these things, if any queries, I will be take some of the queries, and not we can complete. And I can say thank you very much for your patient hearing. I know in a single session I cannot complete all the informations we gave you to understand the legal provision. Nevertheless, within the time limit given, within the limitations, I have told you which are the provisions you have to understand, which are the definition you have to understand, which are the procedures you have to understand, how to file your GSTR 3B, how to file your GSTR 9. Then what are the do's and don'ts you have to do? Do's is available in the law. What are the don'ts? I have given the endless listed. What are that? So under B, having understood, I hope you will be definitely avail your ITC without any much problem, and also that will avoid unnecessary legal complication. Your compliance rating will be also good. Your expense on account of the litigation will also drastically reduce. With this, let me thanks for the first job human capital for inviting me for this session, online session. Thank you very much for the office bearers and the members of the first job and other participants. Thank you very much once again, sir. Thank you, sir. Let me close the session and take some questions wherever possible.
Thank you, sir. Thank you very much for your wonderful key support and your ideas gathered. So this makes us as a sparking to our brain, and this type of information will support us in our day-to-day daily activities. And adding to that, I request all the participants kindly fill the feedback form so that it is easy for us to share the PPT and the e-certificate. So once again, I'm just sharing the link in the chat box. Kindly, I request all the participants to fill the feedback form.
So any queries in the chat box, you can read it, sir. I can give some reply.
So one of the participant, Mr. Amalnathan, asked one query, sir. When
Yes, sir.
we are sending the materials or goods in a vehicle or lorry or container, what are the things to be ensured? Sometimes it is withheld, stopped by the government officials, and where to approach and how to solve it.
Sir, whenever you are moving your goods, that is called a movement of goods. There are certain documents, there are legal provisions called the e-way bill requirements, and documents which are has to be accompanied along with your goods. For that, we are having a section 138 e-way bill provisions. There they say what are the goods. When you want to move a goods, the document which are having, there are for the taxable supply, there are certain provisions are available. For non-taxable supplies, there are some things available, and there may be some requirement for movement where there is a need. No, this may not be a need for this some other like job work or delivery challan. So each and every scenario is covered. For example, if you are supplying any goods on payment of tax, the goods must accompany taxable invoices. One. Second, e-way bill. If you are liable to upload your invoice in e-invoice portal, then you should give these three documents to your lorry person. And in the e-way bill, there are certain areas are required. Then there also you have to understand whether it is a bill to ship to supply or direct supply. There also you have to understand. Then if it is a direct supply, in the invoices you have to mention where you are billing and where you are supplying. That is required. Then in the HSN code number is required and rate of tax is required. And in the part B, you have to fill your vehicle number. All these things are very much required. If it is a multiple times, suppose it is goes different places, then different vehicles, you have to accordingly modify that out. So essentially, for the movement of taxable goods, tax invoice or e-invoice and e-way bill is a mandatory. Sometimes the people are why it is stopped. it is a bill to ship to supply. There, suppose I am sending a goods from my factory or my godown to some other person to his godown. Here, there are 4 locations available. So in the invoice, I have to mention my address, billing address, my dispatch address, and that person's billing address, and that person's delivery address. If anything is missing, and if say my factory, my head office is Chennai, my factory is in say it is a Kanjipuram. If the goods are midway stopped, you can find only the Madras address, not the Kanjipuram address. There the officer may like to detain the goods. In that scenario, no other option, you have to pay the penalty and you can go for the appeal only. So before moving your goods, you should understand what type of supply, what is the document. Suppose I am sending for the goods or job work. There, instead of I have to select, there is outdoor supply, then I have to mention job work in the column provided. Then for the documents, I have to provide DC. So if my outdoor supply is for the job work, my document is for the DC. If my outdoor supply is for my own consumption, branch transfer, then you have to say outdoor supply, others, own consumption under DC. So if you understand these provisions, I think better you can have one more session exclusively on account of e-way bill that will give you the complete scenario about e-way procedure.
Sir,
So
I
because
have
e-way bill is also a major requirement for those who involved in logistics movements, either it is a person who is in the sales or it is in the supply chain management or in the store. All these people should understand the legal provisions governed for the e-way bill. There is actually another session required. You can consider having this at that session also, sir.
Sir, I having one question, sir.
Yes, sir.
Sir, during your presentation, you are talking about that the employee travel should not be
Yes, sir.
avail ITC.
Yes, sir.
So how come, sir?
Sir, if it is legally permitted, the government is allowing. Otherwise, it is not permitting, sir.
Like if my employee is going for work related travel, means is it
Not
possible?
eligible, sir. Not eligible. Not eligible. This is a business expenditure, but does not mean all the business expenses are considered for the ITC.
Okay. So if I availed, means what is the
You are to reverse the ITC credit along with interest if you are not having sufficient balance, and you are liable for penal action if it is deducted by the department.
okay.
But in the same time, if your factory is there and it is governed under Factories Act, and there is as per the Factories Act, you have to necessarily provide transportation for your employees, and your vehicle is a more than 13-seater, then you are entitled to take ITC credit.
Sir, my question is like someone, some of my colleague who used to travel to Delhi or other parts related to
Not
business,
possible. Not possible, sir. Not possible.
their air ticket, all these ITC,
No,
they are
not eligible. There the problem again comes, sir. If you take air ticket, the place of supply is differs. If you are starting from Coimbatore, you are liable to pay. The service is consumption starts at Coimbatore. In that scenario, I am going to pay CGST and SGST of Tamil Nadu. If I am coming from Delhi, I am paying UTGST and central GST. So the department told that is not possible to take credit. So these are the restrictions not possible. That's why they included all these things in section 17.5.
okay. Sir, past 1 year I was utilizing these ITC. In such case, what I have to do, sir?
Thankfully, if you are not detected by the department, right now you can reverse along with interest based on a sufficient balance. Otherwise, the department issues, then you have to unnecessarily pay interest penalty also.
Okay, thank you.
Thank you, sir. I hope Mr. Amanathan sir has resolved his query. Our next query from the participant, one of the participants is Ms. Sophia Jasmine. Is there any benefit by ITC for composite scheme dealers?
Composite scheme dealers, no. That first continues, they cannot avail ITC.
Okay. Thank you.
They are going
And
to pay
next,
either 1% of tax on that entire turnover if it is the goods, and if it is service, 6%. So their rate of tax is also subsidized and on conditions, and their turnover should be 1.5 crores in the case of goods and 50 lakhs in the case of services. And condition is they cannot do any cross border, which means they cannot go for the export, they cannot move for the other than the city, the state where they are working. So all these conditions are there, and also they are not available to any ITC on account of the input tax, input on account of capital goods and everything. So ITC, that compensation is a benefit only for the, if a turnover is exclusively for the B2C supplies in a particular state.
And next participant, Mr. Shelton Emmanuel has raised the query. Sir, can we avail ITC for interstate hotel accommodation for business use?
Absolutely, I told no, not possible. Interstate, even I first, it is not interstate or state. You are not entitled to avail ITC on account of the food and lodging and the travel. We find many of these things are eligible for the, that is, these are for the business expenses. Definitely all business, that's why I'm told ITC is on based on the certain restrictions. The government also repeatedly told, courts also repeatedly telling, you are not entitled unlimited ITC. There are definitely restrictions. So the government cannot give you the ITC as a your birthright. So business expenditure, you need to prove to the income tax department. So better you can give your ITC, your GST number to say it is a business expenditure. But for this, you can take the entire amount as an expenditure in your books of accounts. Don't claim any ITC.
Okay, so thank you. Next participant, Mr. Ashok Kumar has asked one query. Documentation for capital goods movement within state to our empty land, where new construction going to start, the same not yet added in the additional place of business.
Thanks for this query, sir. Recently, our Commissioner Commercial Tax has told each and every place has to be registered as an additional place of premises. All construction sites, all the tower sites, all the windmill sites has to be reported as an additional place. There, the department also went. Many people also approach. They given this particularly exemption only for the tower erection, not for others. So here, if you are having a windmill, or if you are having a construction site, either you or you are the person who is constructing that area has to definitely register that as an additional place of premises. Even though legally correct or not, that's a debatable issue. But Commissioner Tamil Nadu has categorically given for the inspecting officers. That means the goods which are moved from the construction site, the construction site has to be declared as additional premises. Either it should be approved or application should have been filed before the department. Otherwise, penal action will be taken under section 138 of e-way bill provisions.
Thank you, sir. I hope Mr. Ashok Kumar query has been resolved. Next query is Ms. Rajeshwari. She has asked one query. E-way bill need for job work.
I told you we need a separate session, but nevertheless, I take this query. For the job work purpose, you are normally issuing a returnable DC. So when you are preparing your e-way bill, you have to prepare the e-way bill. First, you have to prepare your DC, wherein you have to mention it is a DC required for the rule. That is, there is a specific rule is available. There you have to mention the rule, and you have to say it is a job work for that. Then when you are filing this thing, outward supply, you have to mention job work. Then in the column of the DC, you have to mention DC. If the supply also, I told it is a bill to supply all these things, you have to mention the places from where the goods are moved, where it is done, where it is billed, from where it is going to dispatch, all this information. And you have to provide the value for the goods which are sent to the job work. It may be approximate or it may be actuals. It should be definitely shown. That is for the outward movement of your job work. When you are receiving job work materials from the job worker, either he can provide the e-way bill or you can generate the e-way bill. If you are creating, it should be an inward job work returned goods. There the value should be original value of the goods sent plus materials used by the job worker plus the transportation charges plus job charges. This should be the value. These are only notional values for the purpose of e-way bill, but it is not going to be reflected anywhere in the GSTR1 to claim ITC.
Thank you, sir. I request all the participants to fill the feedback
Sir,
form.
I have one question, sir. Hello, sir.
Yes, sir. Please go ahead.
Sir, actually, when we are booking a air ticket, automatically the ITC is inside our books.
Yes, sir.
So if we are not availing, means what will happen to the ITC, sir? Because they have deposited.
After coming a 2B, sir, you can also that is you are the ultimate consumer. That will be the beauty of your GST. If I am the ultimate buyer, I have to bear all the tax incidents. The similar thing happens to you also. You have to book the entire, you have to come into the GSTR 2B and reject, stating that you are not availing the ITC. Reject does not mean you are rejecting the invoices. There it is a nomenclature is not incorrectly mentioned by the 2B. We also requested the GST and no, don't mention it as a reject. You say it is I am not availing ITC. ITC not availed or ineligible on account of very many reason. So here rejection means it will not come into GSTR 2B and your GSTR 3B as electronic ledger, but in your books of accounts, you can take the total value as an expenditure. Suppose the department you are 1 lakh you are spending, there was no proof, but this proof will be sufficient for the income tax officer to assess there is an expenditure for the business. So that will be benefit for the income tax purpose, definitely not a benefit for the ITC.
But I am getting a notice from the department also stating that you have not availed the ITC.
You have to prove that you are not availed, which means you have to prove based on your internal documents only.
Okay.
Suppose assuming your GSTR 3B and GSTR 3B and your 2B is always equal, then what is the meaning? You have availed ITC. If your 2B, 3B is less than your 2B, then you can argue, yes, sir, I have not availed ITC for certain invoices. In the certain invoices include my travel tickets. But assuming everything is equal for every month, then it goes without saying for the officer to say you availed ITC for the input on the travel also. There you are miserably, people are misunderstood. 2B means I am availing. That is not the case. 2B says your output supplier has supplied these goods, and it is your lookout whether these goods are eligible for ITC as per the provisions of section 16 and 17. Even assuming some goods are in transit, can you avail it just because of, say, for the month end, 31st he has billed, he has uploaded, he has paid the tax, but goods are in transit, you are going to receive it after the 25 days. Whether you can avail ITC for the month? Definitely you cannot avail the month. So these informations are given to the departmental officer. Once they are verifying that a data mining, they will pick up these type of data and intimate to the officer there may be possibilities of incorrect availment. So they will issue a cost notice. Now we have to prove I have not availed. Then you have to prove your internal documents, auditor certificates, whichever is required to substantiate your defense.
Thank you, sir.
Am I correct, sir?
Yes, sir. Yes, sir.
Thank you.
Thank you, sir. And one of the participants, Mr. Kashiraman, has raised his hand. So, Kashiram, sir, could you please unmute yourself and you can ask your query?
You need to unmute, sir. Centrally, you think you need to unmute.
Yeah, I have just unmuted him.
Yes.
He need to speak.
Yes, sir. Please, sir.
Kashiraman, sir. I think
Madan, you can unmute everyone. Madan.
Okay, I've just unmuted everyone. Ask all to. I think everyone can unmute themselves, sir, and they can speak it and ask the query.
Sir, can I?
Yes,
Hello?
ma'am.
Sir, we are taking credit for the travel bills by the employees for air tickets and
sir, I said
lodging.
that is not eligible, madam. Section
Not eligible.
17.5, it is says not eligible.
Okay, sir. Past 3 years we are taking. Now, what we have to do regarding that?
Now, if you are taken, you have to reverse once. Either it will be object to be the audit, or by your assessment officer, or by the investigating team, whichever may come, and they may ask you to do that. You can just check up if you are right now you have found out. You can right now reverse this using your facility called voluntary payment using the DRC 03. That is the best advice.
Okay, sir. Thank you, sir.
Thank you.
Thank you, sir.
So adding to that, one of the person, Mr. Ashok Kumar has asked another one query. Turnover discount. I mean, ITC reversal applicable, sir.
Sir, there are two things. If you are receiving a credit note, the department has told there are two types of credit notes available. One is called a commercial credit note, another is called a non-commercial credit note. If the trade discount is given as a credit note without any mentioning of tax liabilities, they need not reverse any credit on account of the there is a turnover discount given at the end of the year or quarterly, whatever the time limit prescribed by the agreement. So there was already circular has been issued. Suppose this person gives a credit note and reduces his liability and uploads this credit note in the GSTR portal, then automatically you have to reverse the ITC on account of the credit note uploaded. If it is not uploaded, no need. If it is uploaded, definitely he has to reverse.
Thank you,
It is
sir.
as simple as it is.
Thank you, sir. And one more participant, Mr. Amladan sir, has asked one more query. Sometimes the material which we are sent and again returned to us due to damage. Please advise on how about the GST invoice corrections.
You cannot GST invoice correction. You have to issue a credit note for the nullifying the transactions. Then you can issue a fresh invoices as the case may be. It depends upon two situations, whether you are going to get back the goods or you are to, without going to giving any credit, without receiving the goods, that is, you are just going to give the credit notes. You can give the commercial credit notes. Upload the credit note, then you can reduce the liabilities.
How long it will be taken, sir? Because sometimes after
Sir, you can give it, that is depending upon your agreement, sir. Suppose your agreement, even it is for the 2 to 3 years. Now, right now also you can give the service contract. There will be you will be mentioning about how long you are going to give the warranty. If it is within the warranty period, you are liable for that. Then you can issue a credit note even for the goods sent 2 years before.
Sir, I have, sorry to disturb you. Then
Yes, sir.
suppose
Now there is no one-to-one correlation in reporting your credit note in the GSTN portal. It asks what is a credit note issued. That's all. Earlier we had a one-to-one correlation. Now it is not a one-to-one correlation between the earlier because of the trade practice, like in the medicines and some other thing. The warranty period depends upon the life of the some of the medicines or life of the some of the machinery or the commercial requirements needed for the warranties.
service bills,
Participants, if you are having any query, kindly ask your query. Others, please mute yourself. Mute yourself. And if you are having queries, kindly ask it.
What is the valid date for the debit note and credit note? I said earlier that is a validity is 18 months from the date of issue of the credit and debit notes. But it does not require the base date. Even for the 3 years before, not before the introduction of that is, you can say GST Act. After GST Act, you have paid some tax, and right now you want to give a credit note, you can give today also. There was no restriction for the credit note. Only thing you have to legally prove we are entitled or we have to obey certain reasons, certain commitments on account of this supply. That's all.
sir, how about the service bills?
I request all the participants kindly fill the feedback form. And if you are having any query, kindly ask in the chat box or unmute yourself and can ask it. So one of the person has asked Mr. Shajesh has asked one query. I purchased a car in the company name. Can I claim the ITC amount?
No, ITC is not possible, sir. If you are in the same business, it is possible. Otherwise, not possible. A travel agent, there is a car wala, there is a rent-a-cab. This person is there. He wanted to pay 12%. That is a maximum rate of debt instead of 5%. Then he can avail the ITC and he can use it for his outdoor supply. Both should be the same. In that scenario, it is available. Or a training center which is giving a motor vehicle training wherein they need this particular vehicle, they can take the ITC and they can pay 18% of the tax for the training given. Not for everybody. How about the service bills? Is there any ceiling? Absolutely no. You can put only 10 rupees screw the nut and bolt. You charge for lakhs together for that. You can pay the amount. That's all. It is your skill and everything. Identifying the problem and you are giving the service bill. There is no limit for that service amount, sir.
I'm asking for HR services like manpower supply.
Sir, what is it?
It is for HR services like manpower supply like that.
Manpower supply, what is your query, sir? Are you eligible for availing ITC credit? Definitely you are eligible to avail ITC credit.
Is there any ceiling amount within?
No ceiling amount, sir. For ITC credits, no ceiling amount. Only thing, the service should, the condition should be your invoice received, service to be utilized for the purpose. For example, I am a company which is running an airliner. and I want a service of the pilot, whether I can avail ITC, then ITC is available so long it is not prohibited under the incorrect availment, then prohibited under the other service. That's all. If they say hotel industry, all these things, there will be some restrictions. Otherwise, I can use the there is a manpower recruitment services for anything. So long my taxable service is, I should pay the tax for that. But at the same time, doctors, manpower supply, a doctor is supplied for the hospital, both are exempted, that it may not be possible, ITC. Can you please elaborate something more with reference to your queries? I can give some more information. So return of job or goods for receiving this, what is the time limit for the receiving SOC? The SOC cost notice 18 months from the date of your annual return in the case of non-suppression. In the case of suppression, it is 5 years plus 8 months. So 5 years and 5 years from the date of filing your GST or 9 returns. That is the due date. Now 17, 18, 18, 19, 19, 20, section 73 notice cannot be issued. Only notice under section 74 can be issued, proving that there is a suppression.
The last query, I think, last query by Mr. Shelton Emmanuel. Sir, what is the time limit for, replying? He mentioned receiving SOCAS notice.
Sir, within 30 days from the date of issue of the notice will be the 30 days. If you are replying 30 days and you are paying tax along with interest, you will be benefited 10% on account of the penalty. You need not pay any penalty. Otherwise, you have to, if it is prolonging, then you can seek for the adjournment. Then it depends upon the officer how many adjournments he has gives. Even if you are not able to answer, if you can submit your reply at the time of personal hearing. So the department is expected to give 3 personal hearings in a short span of 7 days. So that means before passing the order, they will having a time limit. Before the 3 months before that, we have to issue complete the order. So from the date of issuance, so that is a maximum time limit possible for you to reply.
Almost we have completed with all the queries. So for final one query, just now I just got it. Ms. Rajeshwari, can we get 100% refund for all services like effluent treatment charge and machinery repair services?
Sir, I said the refund is possible on 2 conditions. One is your export of goods under LUT or supply to SEZ under LUT. Second is your next is called your inverted tax structure. If these conditions are fulfilled, then you have to check up whether the ITC avail is on account of the capital goods or other than capital goods. And somebody asked how long I have to keep the document. 72 months from the date of close of your annual returns. Anything else, sir? Definitely we can have so many doubts. It is not, we can say I do not have any doubt, and so given the time limit, I think somewhere you have to complete. Somebody is asking 5%. What is that, sir? One query. Period. Muniappan, there was one query.
Yeah. Muniappan has asked, he has 2 query. How now we keep the ITC record? Okay. Muniappan has query is how long we keep the ITC document.
72 months. I told it is 72 months.
And Ashok Kumar has asked my output tax 5%, whereas my inputs are 12 and 18. That is the case. I have huge input credit balance. Is there any possible to get the refund? Or
what is the commodity, sir? What is this commodity? If the commodity is not restricted as per the provisions of the notification, there is one notification. It says these are the commodities, even though rate of duty is less than inner garment, you are entitled for, sir. You are entitled for Ashok Kumar, sir. You are entitled for the inner garments. That is nothing but your chapter garments. It comes 5% and 12% depending upon the value. And if your goods are less than 1,000 rupees, then you are liable to pay only 5%. Definitely you are entitled for ITC on account of the goods and services. And the goods you will be taking, and there will be a calculation.
Yes, mentioned like inner garment.
Whatever it may be, sir. What garments, whether it is all garments are coming at a chapter 60. That they mentioned there is a garments, it is a 60, there are these things. There the rate of that is 5%. All these garments are 5%. So it depends. If it is more than 1,000 rupees, it's a 12%. If it's less than 1,000 rupees, 5%. So we are giving, so many people are getting this particular refund. I am also having client who is exporting and also having a domestic supply on the almost all the garments, not alone inner garments. He is also outer garments, inner garments, shirts, t-shirts, all these things, wherein he is only paying 5% and he is having a huge accumulation on account of advertisement and other expenses. So definitely he is entitled for the refund.
Thank you.
The condition has to be fulfilled and we have to check up what is the closing balance available. Definitely. Certain parameters has to be verified. Then we can work out, we can, definitely he is entitled for the refund subject all these conditions are fulfilled.
Thank you, sir. And all the participants, you kindly make ensure that you have been filled the feedback form. So if you are having any queries, you can just add those queries in the feedback form so that it will be cleared and resolved in the.
Madan, since it is 5 o'clock, can you?
Yes, sir. Yes, sir. So thank you, sir. Thank you all the participants to have this productive and very successful webinar. And once again, I thank all the participants and especially to our chief speaker, Mr. Venkateshwaran sir, to spend a valuable time for this wonderful weekend session. Thank you, sir.
Thank you very much. Thank you for all the participants, for all your queries. Sorry, I could give only very few. We will be keeping in touch with definitely. Thank you.
Thank you, sir. Thank you all. Jai Hind.
Thank you.